The one side of the marketplace that you are able to find the moves, it's the largest move. Okay, so don't think about this move here and up here thinking, oh man, you're not teaching me everything. And don't think that the selling short here to here thinking, oh man, you're not teaching me everything. You need to think about what I talked about on Wednesday, that this was the move. This was the big move. Okay, remember the big move is going to occur on last Thursday, and it did. We went down to equal lows, picked up some more longs to distribute them above the previous Thursday's high. This is phenomenal trading. That's the smart money, elite entry, exit strategy. The whole model was outlined on Wednesday, and it panned out perfectly. On Thursday of the previous week, that liquidity was purged on Friday. You can't imagine how powerful this is. I mean, you're seeing it, yeah, it pans out great. But when you start seeing it, it's amazing because your confidence level goes through the roof. You don't fear missing moves because you know you'll find the big moves. Okay, I'm outlining them before they happen. I'm giving you the parameters and the signatures to look for, what it will look like, and then now you have it in hindsight, so you can put it in your charts and in your study journals and annotate them. I want to go back to the daily chart before we close our discussion on Euro. All right, so on the daily chart, we had this move here, rejection. We had this move here on ECB, and then rejection. This down here, I believe we've done the work for right now. In other words, I don't think we need to go any lower going into, say, October-ish. Okay, I think everything's bullish from here, and I'm going to trade with that idea going forward. Does that mean, now this is very important, this is a very critical distinction about what I just said. Does that mean every single day is going to be an up-close candle on the daily chart? No. It just means that this is the eventual draw on liquidity, and I believe that they'll be wanting to attack all of these highs back, especially back here. This is for weeks now. I've been looking at this thinking this is likely to go. It's too perfect, it's too clean. We have this huge SIBI here, sell side imbalance, buy side inefficiency. So that will look to be closed in probably by the end of the year, especially if we get some wild sell-off in the dollar index. This will just send Euro up in the 1300s rather quickly. But for now, near term, everything looks like it's done its work on the downside, so it should be expansion on the upside. Right now, it just looks questionable. They put their buys in here. They bought more down here. The signatures that we should see that would confirm what I just said is large, big candles on the upside. Okay, much like we saw on cable. Okay, same thing happened here. They accumulated more longs, break in market structure, run on liquidity, and then another break in market structure. Breaker, last up close candle before the down move, taking out a previous low. Wait a minute, Michael, you said the market structure was broken here and then it went down and ran the stops. It'll happen sometimes. That's where losing trades are going to occur. So if you're using market structure breaks and shifts in structure on the daily chart, you're going to have this happen sometimes. We have another break in structure here where the short-term high is broken. We come back down, dip into the breaker, the high between a previous low that makes a lower low. This is where they'll mitigate. Accumulate new longs, and expansion on the upside. We had an imbalance here. I mentioned this last Wednesday, 24.25. I even mentioned it on Twitter. It was public information at that point, and it was rather easy to get to and expand on the upside. The distinction between cable and Eurodollar was found with Euro pound. I mentioned that we had equal lows here, and then we had equal lows here. And if that's going to be drawing liquidity, that's going to be allowing cable to outperform on the upside on buys, and Eurodollar to be weaker if there's going to be a sell-off. That's how you use this pair. If both of them are going to be bullish, it means that cable will be more bullish. So there's another gem for you for your study journal. Big explosive candle there. That's beautiful. I love seeing that. Now, where does it leave us? We close in this inefficiency here, and we have nothing in terms of inefficiency here. So what do you look for? Buy side liquidity. We have a fair value gap here. Buy side liquidity pool resting above this high here at 125.78. So we'll call it a 125.80 liquidity pool. Next intermediate term is here. And we have buy side liquidity resting below these equal highs, and then we can start going into these back here. We have a bearish breaker. That would be a level to look for, intermediate term to long, 128.65. Okay, so again, that's really looking out, but that's where we're at respectively. On an hourly chart, okay, go and look at the video from last Wednesday and November 11th video. Scrub to about 34 minutes of the September 11th, 2019 video. And shortly after 34 minutes, you'll hear me outline the GBP move here. I mentioned that we have a imbalance here, and I'll zoom out a little bit. I said that we have a imbalance in here, sell side liquidity pool. We're going to drop down, fill in the inefficiency here, and then slam it up into the 124.25 level. And I said if it hits there, then we could possibly see a little bit of a sell-off, but it could also smash right through it. The distinction I made about this level was that it was merely the near-term draw, and I felt that we would go higher, not lower on cable. It only went below the sell side liquidity pool to fill the inefficiency, trade into the breaker, and then off to the races it went. Follow Twitter, follow the commentary I gave you on Wednesday and the previous Saturday. Cable was going to be the outperformer on the upside. It was. Perfect. Okay. Let's drop into a 15-minute time frame. I've already given you the long-term directional targets for cable relative to its daily chart. You can see the reactions here. We had 124.25. It hit it, smashed through like gangbusters, and then came back, find some support, and then rallied through again into Friday, trading up into the big figure 125. Awesome, awesome, awesome move. All of this here was a move to inefficiency here, and the breaker. A low, the high in between, a new low. So they'll mitigate here, which they did. I'm going to zoom in here. I want you to really respect how precise the bodies are. Here's the candle's high, 2290. Okay, 2290. The bodies on these candles, let me take this off. Look at the bodies. This is the bulk of the volume. This is where interbank is going to see the bulk of the volume. Look at the close, 122.90. Look at the open on this candle, 122.89.8. Only off by 2 pipettes, but it's reacting off of that high, which is the breaker. It wicks into it only because this is the broker side. Okay, this is from the body's close to the wick's low, or the tail of this candle. All of that is going to be different across all brokers, because that's the part where they're reaching for liquidity or reaching for sell stops below the marketplace. Key low, that's the one they're reaching for in here. In your broker's liquidity pool, below this low, if there's orders like down here, they would have reached even further for that. That's how the broker uses its spread to tag you and move you out of the marketplace and purge you. Your stop needs to be below the midpoint of this breaker. From high to low, find the midpoint of that. Your stop needs to be below that. You can't just say, I'm going to put a stop below here like retail does. You need to frame it with institutional order flow and be outside the range. Well, that's a bigger stop, Michael. Yes, that means you'll have to trade with less leverage. It's okay. It's not a big deal. You have to compensate and adapt. But look at this reaction here. Again, 34-minute mark of last Wednesday's video, September 11th, to around 35 minutes and some change in terms of the seconds. But literally, it's to script. It's perfectly as I outlined it. Perfect. I mean, you can't ask for anything better than this. Now, you see the things I have to put up with on social media. People that doubt, people that think that there's some kind of tomfoolery. It's all hindsight. None of this stuff could be shown in advance before it happens, and you all see it. So, the reasons why I react to these people online is because just like you probably doubted a lot of this stuff until you started seeing it. There's a lot of people out there that are on the fence about going into those free tutorials and spending any time learning because they believe the nonsense from other people that are just there to be a distraction. The teacher in me finds that offensive.